Hey everyone, so in today's video, we'll talk about something more significant, especially if you're a small retail investor who likes playing in the small and the mid cap space, something that is quite a concern and also bothering for a small and a mid cap investor. So, we'll talk about the recent Sebi regulations on these mutual funds, especially the small and mid cap. So, March 1st, you saw that Sebi came out with a thing asking the mutual funds not to take in more money, or let's say don't really buy stocks that are extremely valued because they feel that there is a big bubble there, right? And after that, we have seen a few mutual fund managers also kind of cutting down on total intake that they're taking, and even the lump sum they have reduced to below 2 lakhs, right? So that was one. And also the latest one is the stress test, right? So basically stress test is, if let's say I'm a small cap investor, I am holding a small cap mutual fund and I want to liquidate it. Let's say I told the mutual fund manager that I need to sell all my units and give me back my money. So something like an SBI small cap fund, it kind of showed almost 60 days in this stress test. That means SBI small cap fund is going to take 60 days to liquidate the whole thing and give you back your money in case. So that is on the whole portfolio, not on like if one guy kind of liquidates it, right? But still, that is good enough to kind of set a panic in the retail investor's mind that okay, this is not really safe. Something very similar happened in the small cap index back in 2018 as well. So in 2018, Sebi came out with this thing that okay, large and mid cap mutual funds should not be holding small cap stocks, or if they are holding, that has to be a certain percentage. So that kind of set in a lot of selling from these mutual fund guys, which kind of made sure that the index cracked from a level of let's say 9,700 to a level of 5,200, although this was coupled with the economic slowdown also that kind of kicked in, right? So now we are at this current point wherein we have this really crazy rally that has come through, almost 90-100% kind of gains, right, in the index level. Now along with these SEBI regulations, if let's say an economic slowdown also sets in, then definitely the small and mid cap stocks, especially those which are highly valued and also those fundamentally not so great ones which are trading at 30-40 p, those are definitely going to correct to 10-15-20 p again, because they're fundamentally not good in the first place, plus they're trading at rich valuations, right? So this is a quite a concern for all those guys who are kind of invested in the small and the mid cap space. I'm not trying to set in fear, but this is what has happened in the past, and like they say in markets, nothing is new. It kind of keeps on repeating, the cycle keeps on repeating. So very similar thing happened like what we saw in 2018, and those who were there in 2018 know how painful those 1.5-2 years were, right? So that's a note of caution there. And coming to today's accumulation, so today's accumulation has again dropped, right, especially after this test, right? So it has kind of gone down around that 60 level mark, right, which is not really great because we were around those levels before the sudden dip kind of came in, right? And also now let's say if the redemption starts coming in, then what will happen, since they are not taking more money, right, or they have reduced taking in more money, and if people start liquidating, that will also put a pressure on these big players to kind of liquidate most of these small cap holdings that they have. That will also put additional pressure. So looking at what the index did today, it was kind of a dull market, I would say. They kind of ended with a cut of almost 0.5%, right? So nothing really great happened in the small and mid cap index, and even the data isn't that great. So a word of caution for those who are like completely invested in the small and mid cap space, maybe you would want to look at how the valuations of your companies are, and also if they are trading below like certain moving averages like the 30 weekly moving average, then it's a sign of caution as well, right? So data not looking that great, especially after this small bump up that we saw, right? So like I was pointing out, probably it could have gone up to this level. Maybe it can be even shorter, because in a head and shoulder you can't be sure how much the head height will be, right? So let's see how the data is over the next few days, and that will give us a clearer picture, right? But as of now, better to be cautious in the small and mid cap space. Although the Nifty index kind of, again, like I was talking in the previous videos, right, it is taking support around this 21,938 levels, and also today went up I mean almost 30 points, 30-40 points, right? So this is the only index that kind of looks good as of now. So let's see what happens in the coming days. I'll anyways be making videos whenever I see there is an improvement in the data to kind of guide most of the retail investors. Thank you.